Hi there, welcome back to Save with Crypto. My name is Save with Crypto. Now, yesterday I did a video where I talked about the three things that I look for on a chart when you're looking at a crypto asset or a normal asset, a TradFi asset or whatever. Now, those three things were trend, momentum and volatility. And yesterday we talked about trend, and in actual fact what I was showing was this moving average indicator here, where I was saying about the importance of the yellow and green lines. And last night when Trump was doing his speech about the tariffs, I put out a YouTube short just before that happened, and I was looking at this green 55 EMA here and this yellow 21 EMA going towards each other. And what I said was if those cross, then that will be a very bullish sign and the price will go up. And look what happened is they got really, really close. The price went up quite a lot, but they didn't cross. So that is a really good example of the bearish trend we're in now, because the bearish trend started here when the yellow crossed the green, and that was on Saturday. And we've actually stayed in a bearish trend because the yellow is still below the green. And that's a really good example of how you can use these EMAs to confirm that the trend for now is down. Now, the next missing piece of the puzzle is something to identify trend reversals. So what we look at there is the momentum. Now, what is momentum? Now, with anything like this, you can always go over to investopedia.com and have a look for definitions there. So here it says momentum is the rate of acceleration of a security's price, that is, the speed at which the price is changing. Momentum trading is a strategy that seeks to capitalize on momentum to enter a trade as it is picking up steam. And it says here that strong momentum can continue in an upward or downward trend, which can be confirmed by changes in trading volume and other technical indicators. Okay, so what I want to show you is one indicator that you can use to identify momentum. Now, there are many indicators you can use for this, but today I want to show you the stochastic oscillator. And there's a really good definition of a stochastic oscillator here on investopedia.com. It says the stochastic oscillator is one of the most relied upon tools in technical analysis, ranking alongside popular indicators like relative strength index RSI and moving average convergence divergence MACD. Developed by George Lane in the 1950s, this momentum indicator helps traders identify potential market reversals by comparing a security's closing price to its price over a given period. Like a thermometer measuring market temperature, it signals when assets may be running too hot, overbought, or too cold, oversold. So let's have a look at a stochastic oscillator and see what it's all about. Okay, so if you go here on TradingView to the Indicators tab here and search for stochastic, and the one I'm going to look for is this one here. It's just called stochastic. It's not the other ones. It's not the momentum index or the RSI. It's just stochastic. Okay, so give that a click and that will put it on your chart. Now, I like to change the settings to the ones that Eric Crane uses. Eric Crane is one of my favourite technical analysts on YouTube. Please do check out his channel and subscribe to it and tell him that I sent you. That would be really nice. Anyway, so you go to the stochastic, you go to the gear icon there, give that a click. And what we're going to change here is we're going to leave that K length on 14. We're going to change the smoothing to 6. And we're going to leave the percentage D smoothing on 3. Okay, so the K goes to 6 and the D goes to smoothing. That is it. And just press OK. Now, those are the ideal settings for crypto. For other assets, you might need to adjust it slightly, but that's what I use for crypto. Now, it's probably worth looking at what K and D mean. So I've got this explanation here from ChatGPT, where it says in a stochastic oscillator, K and D are the two key lines used to measure momentum and identify overbought and oversold conditions. So percentage K otherwise known as the fast stochastic line. This is the primary or raw stochastic value. It measures the current closing price relative to the price range over a set period. Okay, and there's the formula for it there. You can see here that you would interpret that as over 80% as being overbought, a potential selling opportunity, below 20 as oversold, a potential buying opportunity. Okay, so when it crosses down from the 80, that is a possible bearish reversal, and when it crosses up from the 20, possible bullish reversal. Okay, all pretty straightforward so far. Percentage D is a smoothed moving average of the percent K. Okay, now that is usually a 3-period simple moving average, which is what that 3 is that we were talking about before. So it's a 3-period simple moving average of the percentage K. Okay, now that helps filter out noise and reduce false signals, and it acts as a signal line so that when it crosses over with the percentage K line, that can indicate trade opportunities. So we've got here, it's a bullish signal when the percent K crosses over the percent D. It's a bearish signal when the percent K crosses below the percent D. So if we look here, for example, at the pump we got last night, you can see that was the peak there. And at that point, the two lines in the stochastic oscillator crossed over. And they were both just above that 80% line there. To show you one going the other way, something like this one here was rather beautiful because they both came below the 20% line and they crossed there, indicating that the price was going to go back up. So that is the essence of how you can use a stochastic oscillator to identify trend reversals. Now, for anybody who's been following my adventures of trying to publish an indicator on TradingView over the past few weeks, you'll know that I've been trying to get this SWC QR oscillator published, but I keep running into problems. So what I'm doing now is I'm working with my developer friend Mr. S, and we are together going to rewrite what is essentially this indicator here. Now this, although it looks like a complete mess, is actually insanely powerful, and this one actually uses like 4 different stochastic lines, and just for the record I'll show you how these ones are set. So here what you've actually got is you've got a percentage K and a percentage D for stochastic 1, stochastic 2, stochastic 3 and stochastic 4. And the idea with this one is that it will show you a lot more information, and it will also look for when these 4 slightly different stochastics are converging and doing things together. Now obviously this is going to look very different on different time frames, such as the 1 minute, 3 minute and 12 minute, which is the ones I've mostly been using it on. But this is in development. We're writing it again from scratch, and we're going to start off with a simplified version and then add the bits to it as we understand it more and get it published, and hopefully don't run into any publishing problems. So that's what we're doing with that anyway. But I thought I'd just show you a basic stochastic oscillator and what we're intending to build, and this is going to be amazing. It's going to have these like bullish and bearish divergences marked on there automatically, and then other conditions which indicate overbought and oversold areas. So if you like the sound of all that, please do give the video a big fat like. I will update you when we're at the next stage with this indicator, and the best way to know about that is to be subscribed and to have the notifications set on all. Any questions, please leave them in the comments down below. While you're down there, please do make sure that you are subscribed and you do have the notifications set to all. And above all, tell your friends.
Save with Crypto has to be one of the best YouTube channels that the United States has ever seen. Kamala Harris is not a subscriber, but I am. I have notifications set to all as well. I'd strongly suggest you subscribe to Save with Crypto today. Above all, you should tell your friends.
Save with Crypto is not a financial advisor. He just makes ice cream on the internet. If you cannot find someone to do your own research, you must do it yourself, just like I did not.